Hello, everybody. We are back. Sunday night, Sunday fun day. Unfortunately, not for the Bear fans, but Mr. Vecchio, how are you?
Not doing well. You gave us Justin Fields, so not a good day for the Jets.
Well, look at the bright side. New York teams are 0-2, 0-2, and the Bears are 0-2. So between us, we have 6 losses.
Great. Misery loves company.
There you
Good.
go.
Yeah, good. Great.
Yeah. So anyway, yeah, it's a rough one for sure. Hey, so I was in New York in your stomping ground on Friday. I was doing a show, and so I kind of missed the action, but maybe there wasn't really any action.
There's a little bit of action. Stocks moving up to the upside. I know bond yields came back in a bit, but what's to dislike about an all-time high close in the S&P 500 or the NASDAQ ahead of the Fed meeting and VIX-piration and triple witching this week? Oh, what a week it's going to be.
I thought they closed them actually down at the end of the day.
Did they?
Yeah, I think they closed the S&Ps actually a little lower. I
4
want to say like
points.
5 handles lower or something like that.
Yeah, well, NASDAQ was up. It was, you know what, the rotation at the end of last week wasn't really that impressive. Thursday was really good, but then Friday everything came back in. Volatility is the North Star, Tom. 11.2 IVR, teens in most of the indexes right now.
Yeah.
That's
No, there's no question.
Everything.
The fear indexes are the fear indexes are the only thing that's cheap. So I was at this conference on Friday. I was one of the speakers, and the 3 speakers before me, because I got there a little early, were talking stuff that I thought I would never hear. Like I didn't know where this stuff comes from, but the first guy was talking about Tesla, and he was calling it to go to where's Tesla now, 350 or something? I don't know where it was.
Right around there. 396 now after Friday.
Oh, really? 396. Wow. I didn't realize it was that high. Well, he was saying 1500 is a lock. These are like legit like money managers, like 1500 is a lock. Like throwing some numbers out there. There was another guy that was talking about like they were just talking about some AI stocks. And they were like, the numbers they were putting up there, Nvidia, well, we could easily see Nvidia go back up to 1,000. And I'm like, what movie? Like, one guy said open door, probably going to 200. And I'm listening to this speaker after speaker, and I'm like, I must live in an alternative universe. Like this is this what these guys talk about, this hedge fund world? Because it's not part of my world. But yeah, I threw a little cold water on their party, but when it was my turn to speak. But I felt when they asked me what the only thing is that's cheap, I said the only thing that's cheap right now is volatility. I can't find a cheap commodity. I can't find, unless you want to say natural gas, but I can't really find a cheap commodity. I can't find a cheap stock. I can't find a cheap sector. It's you buy stuff now, and it's I don't know that you're any better or worse off than any other time, because I just don't like the pot odds. I think that's all it is.
It's been a strong run since April.
Oh my God. Yeah, we haven't had a downtick since April.
But so square this with me. Do you care more about the move off of April, or the fact that I see a lot of people saying, is this a crazy bull market? The S&P is up like 13% year to date.
I think it's a I don't think you can say the S&Ps are up 13% year to date without saying that the S&Ps are, without going back a little bit further than that and suggesting that, the S&Ps are still, 6,600 or 6,650, whatever it is. Like, meaning you'd have to go back a couple of years, and then you can say it's a crazy bull market. I don't think you can say it's a crazy bull market in 2025, except that 2025 has been a very strange year in that we've endured one sell-off, and that's it. Other than that, we've pretty much been up. I mean, I'm curious to see the number of days up versus down this year. It feels like, it's got to be 70-30.
I think that sounds about accurate. And Tom, we're getting we're getting the markets opening up here. First quotes coming through. It is a very quiet open here. S&P up by 0.02%. Nasdaq barely underwater. Russell, S&P, or rather Dow, slightly above water. Crypto's coming a little bit here. Taking a look at the bonds, those are a touch weaker on the day. Notes and bonds both down. Crude oil is off a handle at 0.3%. Nothing, as Josh would say. Gold, silver up by 0.1 and 0.3%. So somewhat of just coming back in from where we were Thursday, Friday last week. I wouldn't say anything material though. No big weekend gap thus far.
The bullishness in Bitcoin
Hmm.
and the bullishness in gold too, to combine with all the stocks. I mean, it's kind of wild to me. Um, and and last week the Nasdaq was just it completely outperformed and was just crazy strong. Um, I'm curious to see if we can carry this through. This is triple witching week, and triple witching week traditionally in September has been super strong, except for the last couple of years. Yeah, last couple of years, it's been two sided. But traditionally, this is one of the strongest expiration cycles.
Hmm.
Um, it's also one of the largest OpEx. This is going to be one of the largest expirations in history. That's at least what everybody's saying right now, just because of the amount of open interest in the SPX options and in the ES options is just massive because of all the 0 1 day weeklies and everything else. So when you get that kind of open interest, you usually have a big tug of war going on to later on in the week. But you've got a massive, triple witching coming later this week. For the last, I think, 27 years, like 19 have been up. So going, from Thursday to Friday. So there tends to be a lot of pressure to the upside. I think if you're going to get downside pressure, well, we said this the last couple of years, and the downside came really Thursday to Friday. But I think this week you're more likely to see the downside earlier in the week. I thought they closed. I thought they closed with the week with just a little bit too much, abandon to the upside, a little reckless abandon to the upside.
Let's talk about this end of the week though. Wednesday, right? Expiration and the Fed meeting. Friday, triple witching. I'm looking at the close. The plus or minus the expected move through Wednesday is only 55 points to the end of the week, only 69.
Yeah,
We've had this
because
conversation. Is it complacent or?
No, it's because triple witching tends to be very much a tug of war.
Mhm.
So you always see the vol on triple witching weeks to be significantly lower, unless you're going into a period where things are just crazy. But triple witching weeks always have lower vol. We used to trade. I remember some days trading in the pit when on triple witching. Even though there was like a lot of rolls to do, and even though there used to be a markup all the time, you would sometimes intraday get down to 5 or 6% volatility intraday on triple witching. So there's just because there's so much tug of war. That's why I think if there's something going to happen, it may be earlier in the week. And again, the biggest risk to the markets is when there's this much contraction of volatility. When you think about it, there was a lot of stuff going on in the world last week. It was a little ugly. It was a little dark, as you could say, for many reasons. It doesn't have to be a specific political event. It could just be a lot of stuff going on in a lot of places. And yet volatility, it just shrugged everything off. It doesn't care. It really doesn't care. And there have been sellers of volatility. I kind of feel like the last time we've seen this kind of, selling and volatility, you almost have to go back to 2008, end of 2007, sometimes in 2008, that we just saw I don't know if you remember, but they used to write articles like this, I still always remember writing an article about a floor manager at Target who was selling volatility, making $20 an hour on Target and making $100,000 a week selling volatility until he blew out. So I think that's kind of, the fun stuff that we bring up. Did I lose? Might have lost Chris. Hey, James, did I lose Chris?
Yeah, stand by adjusting.
Okay, no, we can keep going. I mean, listen, there's plenty of stuff to talk about. So S&Ps are down $1.50. Nasdaq's down 11. That's almost a crash. The Dow's down 5 and the Russell's up 1.5 points. That's the first time I've seen Russell higher ever. The bonds are down 8 ticks. This is right where they were trading most of the day on Friday. Notes down 4 ticks, again, right where they were trading most of the day on Friday. And looking at the other markets, what's going on tonight, other than Bitcoin being down 700, there's not much. Most of the other commodity markets, gold's down small, silver down small, euro's down small. There were the dollar really got slammed last week, and there are definitely some currencies, like especially the Mexican peso and other things like that, that are multi-year highs. But I'm not sure that that means anything. I think the real question here is, how low are we going to let the U.S. dollar go, and also what is even the relevancy of bonds in the Fed this week? Is the Fed at this point? Is there anything they can do that's not already priced into the market? And how relevant is that to where S&Ps are trading right now? So, hey, Ilya.
Figured I'd join you since Chris has fallen off somewhere and you said the magic words.
Yeah,
the first one you said was dollar. The second one you said was Fed.
I mean, what I said is that the dollar against some currencies hit a multi-year low last week. Mexican peso being one, but there's other ones too. The dollar's pretty much been in free fall, and and I also wonder about the relevancy of the bonds here anymore, because I kind of feel like they have been. I kind of feel like the Fed, whatever they do, it's already priced in. Like, I don't think there's anything the Fed can do other than if they do nothing, that would be a surprise. That would be a shock.
I think there's one thing. So this is one of those quarterly meetings where they're going to update their summary of economic projections.
Yeah.
And this is a variable where there's actually some meaningful disconnect between the markets and the Fed. I think that they're going to cut is a foregone conclusion.
Yeah, of course.
Like, that's done. You can look at Fed funds futures. It's there. It's in the price, whatever. The larger question is, in June, the Fed only wrote down one cut for next year. And if you look at Fed funds futures here, they've already baked out 3 for next year. So I think what they want to see is they want to see the Fed kind of take the hint and say, okay, you know what? Here's 2.
Yeah.
And the market will go, okay, they're moving in our direction. They're listening. They're paying attention. And if they don't move it, if they go on some sort of tariff inflation, we don't know, blah, 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 and then they don't go the market's way, I don't think the markets are going to love that.
It's really funny. I have this I've been thinking about this a lot, and I really don't think, like, that's why I mentioned the relevancy of the bond market. I just don't think it matters what the bond market does and what the Fed does right here. And I also don't know if the so-called Trump economy matters either, because I don't think that I don't think that this market is going to move. I don't think it's going to do anything different based on, like the stock market suggesting, oh, the economy's in good shape, and the job market saying, oh, the economy's crap. But I don't know that any of those fundamentals are relevant right now. I think this market is trading on a ton of momentum, and it's trading on just a lot of inflows of cash, and I don't know how sustainable that is, because it's never been sustainable in history that way. Like, trends are not sustainable and cash is not sustainable, but that's what it feels like the market. I'm not sure there's any relevancy to, to the bond market, to the economy per se, to any of Trump's economic policies. I'm not so sure any of that is playing, other than for a small little emotional move. I don't think that any of that's what this is about.
I'm going to make the argument that you're right, that's what matters, but that the reason that it matters is because we've baked in all of this Fed easing for next year.
Yeah, but don't we
so the market is basically saying the money is going to be cheap.
But don't we always bake it all in?
If the Fed, it depends. I mean, it depends what the markets think the Fed is going to end up doing. Because if you listen to what the Fed is saying, right? They've been spending all this time saying we're so concerned that the tariffs are going to be sticky and we don't want the inflation to get into expectations, because then this whole rate hike cycle we did, the massive one, is kind of undermined and we've lost the plot again. So, Powell is out there pounding the desk going, we're not going to let expectations get stuck, all these things. And the market's been telling him, you're focused on the wrong thing, because the inflation expectations in the bond market, the break-even rates, they haven't really gotten off the floor in any kind of a meaningful way, basically since they hit bottom in April. So the market is telling the Fed, you're worried about inflation. That's the wrong concern. What you should be worried about is growth and what these tariffs will eventually do to the business cycle. You need to get in front of this thing. And so that's why I think you have this big build out of rate cut expectations, not so much for this year. The market's had this year benchmarked in line with Fed forecasts, basically back to May. Nobody's surprised here. Fed said back to December, we're going to do 50 basis points this year. That's where the market's been sitting since mid-May. Nobody's confused. The big question is next year.
Market's not sitting. Let's be fair. This market's
no,
rallying.
I mean, as far as expectations, like if you look at Fed funds futures, they've been sitting at the 50 basis points that the Fed gave them since May. It's next year where there's this increasingly big disconnect, and that's been exactly the period of time that stocks have exceeded, basically recovering the down run from mid-April or from mid-February into April. Like once they got back off the April lows to where that sell-off at the beginning of the year started, policy expectations locked in for this year, more rate cuts started going into next year, stocks kept going. And so you get the sense that it's a liquidity hope cycle. And if you don't get the liquidity that you're hoping for, then you've kind of realized that Wile E. Coyote doesn't have any ground under his feet anymore.
Well, I'm just a trader, and I look at this market, and all I think of is, okay, I'll go back to what I said originally to start this nighttime show. Nothing is cheap.
Nothing is cheap. No, I completely
There's
agree.
nothing out there that to me looks like, okay, I'll buy this and sell this, or I'll buy this because it's cheap, or there's nothing cheap, and there's not a lot of volatility to sell. Every time that since I started trading in the early 80s, that we've had situations where nothing's cheap, literally nothing across the board, nothing's cheap, and volatility's low, is when we've had, we can't tell you why, because nobody's going to know. Nobody knows why, but it's when we've had the largest explosions in volatility and the sharpest down moves. And it's always for some different kind of reason that you can't expect and that we work into it later. But since I've started trading, whether it was, in 87, whether it was, 2000, 2000 a little different because volatility stayed high through the Y2K stuff. But then 2007, 2008, and then, 2017, before we kind of just dumped in 2018. The only difference today is that we don't have a lot of stupid kind of like meme-like stocks. We don't have the crazy speculative stocks. We have ridiculously, we have $1 trillion companies that are trading like speculative stocks. That's the only difference.
Totally. No, I completely agree with all of that. It's sort of why I've been looking at the short side, and obviously I got shaken out by the new highs last week, so I'll look for a new spot. I'll go again. But this is why I've sort of looked at risky assets writ large and going, okay, everything's expensive. When you get a sense that something might give you a run, and obviously it didn't this last go around, but if something might give you a run, you bet the other way. How do you feel about the dollar here? Because the dollar to me feels like it could be cheap, but vol is basically nowhere unless you're looking
at the dollar's cheap, but the rest of the world's scared of buying dollars right now, and everybody here is already long dollars. I mean, I'm long yen. That's about it. But the dollar obviously has gotten crazy cheap against other currencies. But you know what? American isolationist policy until something changes in this administration, the dollar is going to stay dirt cheap. Because I think in order to prop up the U.S. economy here, you need to have a cheap dollar, because otherwise, if you get an expensive dollar on top of this horrible trade policy, you're going to just implode our economy. So
Yeah.
I think that the dollar being cheap doesn't really bother anybody, but it bothers me a little. I don't like losing. I don't like a ridiculously cheap dollar, and I don't like losing, kind of that, that top position, being number one
Well,
out
and
there.
purchasing power.
Yeah, of course.
Yeah.
course.
I mean, so I made a little money.
So
over
you
the
do
past.
know though that that's one of the reasons, the dollar being this cheap, and is one of the reasons that everybody says the argument on Wall Street is that's why you have to be long equities. It doesn't matter. It doesn't matter what you buy. You just have to buy a basket of good equities, because otherwise your purchasing power, you just die. The cash has no value. And that's the whole argument, which every time they make that argument, it's a freaking top. And
Yeah,
that's why
no, I totally
absolutely
agree.
despise that argument.
I totally agree, and it's why. So when the dollar started bottoming in July, I started buying a little. I've made a little bit of money. Obviously, it's come off the lows, but it's not like it's run. I've just rolled over from the September futures just last week into the December, and I'm just kind of quietly sitting. I'm a little bit short euro. I'm a little bit short pound. I had to get out of Aussie because it broke out.
Well, everybody should roll futures already. I mean, it's the roll.
Right, but like,
yeah.
I'm still on it. This is like, it's made a little bit of money.
Yeah.
I think into the end of the year, the dollar has room to correct, and I see it in a kind of adjacent to stocks, where if it's gonna correct, it'll be not because the dollar has some great yield advantage or something like this, but because there's some sort of risk off thing. Markets go to cash, risk comes off, and the cash of choice is dollars.
Hey, we have Vecchio. Oh, I thought, yeah, we do. We have Chris
Yeah, he's back.
Yeah. Hey, Chris.
Just turn your sound on, Chris.
Yeah.
The computer wanted to restart in the middle of the show, which is thank you for the automatic update, Microsoft. That's fantastic.
They're special that way.
It's Steve Ballmer. I've been listening to all these podcasts about the Clippers and this fake aspiration tree planting company with Kawhi's contract. I think Microsoft's out to get me, Tom. Yeah.
Yeah. Well, that's a whole nother story for a different day, because that story is the absolute tip of the iceberg. That is going to blow professional sports out of the water, I think, because that will explain a lot of stuff. And
yeah, like, how come Mark Cuban's so vocal, and how come Dirk was only getting paid $5 million a year a few of those years? Just things I'm wondering.
There's a lot of stuff that everybody's wondering now, which I think is going to be the next absolutely giant sports scandal. And we'll see how I'm sure these owners have been in collusion for a long time. And this has been, I mean, it's kind of funny how one stupid reporter, one stupid article blow this whole thing open, and somebody figured it out. It was bound to happen eventually, but it's probably been going on as long as college players have been being paid under the table, the same kind of thing. So I think it's going to have a big impact on professional sports and ownership. There's going to be some fines flying around. These guys don't care. I mean, Bomber has $200 billion or whatever. Like, how do you fine a guy with $200 billion?
He's worth more than the next 10 owners in the NBA combined, I think. So.
Whatever. He's probably worth more than the entire NBA. Whatever. It doesn't matter. So
Windows money runs deep.
Yeah. Windows money runs deep. But so anyway, we're just talking about kind of getting back to that theme of tonight, Chris, which is nothing seems really cheap here. And to me, I just feel like there's a few red flags. But again, red flags can expose themselves for a year. In 2007, we had red flags that lasted, all the way until the summer of 2008. And big red flags, like they were waving them, waving them all over the field.
Even earlier, like even late 06, you started to see, and people were going, "Oh, we might have a mortgage crisis," and it took like a year and a half, 2 years.
Yeah, I mean, and then going back all the way back to 1987. I mean, we were screaming in '86 that we were overbought. By the time we got to the summer of '87, it was like we were like you ran out of money getting short. And the same thing happened in 2017. After Trump's first year in office, we didn't have a 1% move the entire year.
Yeah, Vol died in 2017, and until you get to Q4 of 2018, when equity markets come off, like the market was just basically there's nothing doing.
Well, the beginning of 2018, they crapped out. The end of 2018, they crapped out.
Well, beginning of 2018 was Volmageddon, right, with that Credit Suisse product that blew up.
Yeah. But it doesn't matter. It doesn't matter why. It's always there's always something. It's never what you think. Like you can sit here and talk about the dollar and gold and jobs and bonds and everything else. It's never that. It's just like anything else. Like you don't buy insurance for the things that you think are going to happen. You buy it for everything that you have no idea what's going to happen. And that's really that's probably what scares me most, is that there's not a lot you can do right now to protect yourself against an explosion of vol, except stay a little bit, maybe keep a few short deltas and maybe keep your position small. I don't know what else you can do.
This week is a tough week, right? You have the Fed, and then you have earnings are relatively quiet, Tom. I mean, are you thinking about anything around FedEx right now?
Nothing at all. After earnings last week sucked. I mean, Oracle was the worst play of the year. It was, and the crazy thing about Oracle is that we had a 4 standard deviation move, and then it retraced by $50. It came back inside of the 2 standard deviation move by the end of the week, but everybody had already blown out of it. There was no way to hold it. So Oracle was like an absolute, I mean, the market completely screwed everybody in Oracle. No, there's no earnings plays. No, not even a consideration. FedEx is just way too thin.
Way too thin. 59.8 IVR. That is one of the noteworthy things for this week, though. There's just really not a ton of volatility. I mean, 2 futures, 6C and ZC, corn and Canadian dollar, have IVRs north of 50, and then
neither of those are tradable.
You're getting under 20 for most things,
but it's not worth it. So forget it. And
I actually made an ag play last week, Tom. We'll see if it works out. But on Friday, I saw that we had the IVRs were up in the 80s briefly at the end of last week for the beans. Actually hit a high of 93.
Yeah.
So I sold an iron condor here on the outside of the yearly high, yearly low range. It's
okay.
We'll see what happens, but it's not something different, right? It's not. Is the Federal Reserve, is Jerome Powell going to move the soybean market this week? Probably not. No. I like having things unrelated to the Fed on the docket. So if it's like natural gas or even crude oil, doing something that's directionally neutral in energy in the soft ag is one way to bring down the beta weighted deltas if you're overly levered to the Fed, like I may be with my long bonds and long stock positions.
There was a time in the early 80s when the S&Ps used to move based on where soybeans opened at 9:30 in the morning. That's how crazy. I mean, throughout the years, the markets just found different things to base its kind of moves off of, that it's completely emotional, that have nothing to do with basically anything. I just think the main thing people should be just keep your eye on here is just, you can't, where we currently are today, it's difficult to defend things. Like that Oracle move last week was impossible to defend because 4 standard deviation move to the upside, and then it came back by 50 handles, which is 2 standard deviation move all the way back down, and all happened in 3 days. You can't defend that thing other than staying small.
So we're staying small this week, right? It does feel, Ilya, you and I were talking about this on Futures Power Hour on Friday. We're having some positions that we're getting into that like 21 DTE zone on longs, or like MES that need to be rolled over. What should be done? I started extending my duration, right? I was able to ride out NFP and CPI in the last 2 weeks and get through it
for a few months too. Yeah.
But with the Fed and just, Tom, for the life of me, I don't know. This is a September Fed meeting. We get the new growth projections. I know this isn't really your cup of tea.
No.
But I see new growth projections, inflation projections, a Fed press conference with a new Fed governor, with Stephen Murin's going to be confirmed this week. Is Lisa 55 points through Wednesday's close? Are we kidding? But the last time I said that, Ilya, I was looking for the reverse iron fly in the 0 DTE SPX, and we settled right in the range around non-farm payroll. So
Yeah.
There's part of me that thinks this is underpriced, but there's another part of me that says the market's been pricing these events on the nose, and I don't think it's worth saying that the vol is out of whack.
No, I do think you have to be open minded to the fact that it is out of whack and not take it at face value. But you're right. The thing is, if everybody was expecting crazy, then you probably wouldn't get crazy. Crazy depends on people not expecting it. Otherwise, it's priced in and you don't get it. That's sort of the event risk aspect of this. You're not going to get crazy if crazy is already discounted. So this is the whole thing. The Fed is an event risk because it's not, because there's lots of complacency and maybe it'll land within the range. I'm not betting on it though. We'll see. I don't have a good directional opinion on the indexes here, other than I don't want to be long, but I don't have conviction to get back
You
short.
don't want to be long.
Well, I mean, I'm long other things, but I don't want to be long S&P. I don't want to be long NASDAQ. I'm perfectly happy being long some of the ETFs I have, but they're bigger, longer term ideas not tied into the overall kind of picture. I don't want to be long the indexes. I'm fine being long the dollar. I'm fine being long the metals. We'll see. Those are kind of opposite sides of the ledger. I got bailed out by the bonds last week because obviously the stocks short didn't work, but the bonds long worked and then some. And so I was actually able to make money last week. Sort of like the dollar bailed me out of being short stocks in the first 6 months of the year. So at this point, I'm kind of, again, straddling the fence on opposite sides of the Fed. I'm long both dollars and metals. So we'll see. I sort of get the sense that it's going to be a bigger deal than the markets are currently assigning it. And maybe it's because of what Tom said, because of vol just being low because there's so much jostling for the expiration. Maybe that's what it is. But it feels like Wednesday is going to be a bigger deal than that vol suggests.
So Tom, let's close this out. For the lack of a better phrase, I want to have a gold idea and a fool's gold idea. What do you think the best trading opportunity this week is? And then what do you think is the most deceptive trading opportunity this week, where it's a bit of a trap? It's not real gold. It's not a good opportunity, even though it's presenting itself as one.
I think the street is long volatility, and I think that it's the right play, but I don't think it's going to happen this week. So I think the fool's gold play is that I think after this week, after triple witching's up, I think it's going to be a really good opportunity to either be short S&Ps or long volatility. They're the same thing. It's the same exact thing. And so I think the fool's gold play is to do it early this week. Like, I'm already short, so I think it's not the right play. I think in a perfect world, you'd wait till later on this week, let them get through this, generally bullish expiration cycle. Let them blow off a little bit more steam. Maybe we get close to, I don't know, maybe another 50, maybe we get up to a round number, maybe another 50 handles higher, like the expected move. And then I think it's a very interesting long vol play, short the marketplace. I think the fool's gold play is that. I think the rest of the week, it's just going to be more of like what you saw on Friday. It's pure stock pickers. Like, Apple had been beaten up, so it was all contrarian play. Apple had been beaten up, so Apple went up $4. Reddit was out of control all week, so it went down $6. I just think that was that was the case for the entire week. Stocks that were up big went down. Stocks that were down big, they went up. And I'm not so sure there's much else to it. It just looks, to me, it looks like it's the same dollars and people are just rotating them and they're playing. Like, everybody's just playing. They're keeping a long bias and playing. Customers, the retail customers, been the most impressive because whatever happens, they just stay long on balance. And I don't
My
think
people. Those are my people, Ilya.
and I don't think they're moving. I don't think that they've been shaken up yet. And I don't think that they're necessarily, jumping in and out of all these different things. I think it's kind of like more of a game of professionals that are bored. I mean,
Well
you do
said.
too.
Well, then you start playing with the zero DTEs, and then you find some excitement. But whether or not that's working for me, I'm a garbage scalper. But you know what? Tasty Live is done here for now, Tom. Right? First call's done. We're back in 8 hours. I can do math this week. 2:30 Eastern, 1:30 Central
Well,
Time.
we've
Trade
had
with
a
IG.
grand total of about a $4 move tonight in the S&Ps from down 1 to up 3. I mean, it's been, the NASDAQ's moved $20 from down 10 to up 10, but it has been and bonds, they feel like they're closed. They've been down 8 all night. So it's been a very slow night. We originally started this Sunday night show because we were moving around, 2, 3, 4% on a Sunday night during the pandemic. And now we're like, now we're moving. I mean, we're not moving.
2, 3, 4 points instead of 2, 3, 4%.
2, 3 handles on a $6,600 index is what is that? 0.0003.
Josh is not going to be happy you did not round up.
Well, I can't even get to 0.1%.
That's what I'm saying. Sometimes the decimals matter.
Yeah.
That they do.
Tom, so we'll see everyone in 8 hours' time for True with IG out of London. Then you and Tony are back tomorrow morning, 8 Eastern, 7 Central. But I think that there's going to be lots of opportunities to catch you elsewhere, right? I heard something about CNBC tomorrow morning. Am I allowed to say that on air?
I think I'm doing it early in the morning, but before most people get up.
I'll be awake.
I'm a filler.
Always in our heart.
I'm like a seat filler.
Pretty good looking one at that. For Tom Sosnoff, Ilya Spivak, I'm Chris Vecchio. Good luck trading. See you in a few hours. Get some rest.
Welcome, everybody. It's another episode. It's another rising star, and I'm looking forward to this one today. Another Florida boy. Will, how are you?
Florida man.
Florida man. He's a Florida man.
Very good, Tom. Thanks for having me.
Florida man. Does that mean like you fight gators? Like you?
I have a pet alligator, and no.
You were gonna.
I couldn't bring him for the trip.
You were gonna totally freak me out if you said you had a pet alligator. I've watched a lot of.
They wouldn't let him on the plane, so.
When you got out of school, you really wanted to get into the world of finance.
Yes, actually, my whole passion was the stock market, and that started way back when I was 12.
What 12-year-old wants to start in the stock market?
My best friend at the time, his name was Tommy, and the elevator's doors opened, and he opened up this magnificent penthouse, and I said, what does your father do for a living? And he said, he's a stockbroker for E.F. Hutton. And that's when they had the commercials, my broker's E.F. Hutton, when an E.F. Hutton talks.
Sure.
And back then, the whole stock selections were like a well-guarded secret, shrouded in mystery. And,
very much so.
And I had to find out just what this business was about and how it operated, and that just started just a lifelong learning process.
It's so funny. We have so many viewers now that are younger that they have no idea who E.F. Hutton was.
Oh, it was great.
They had great commercials.
Yes.
But totally a different era. So when you got out of school, you just decided, hey, I'm going right into this field. Where'd you get a job at?
Oldie Discount Brokerage. It was the controversial brokerage. My first day, I got a bachelor's degree in finance, and then from that point on, I learned, cost benefit analysis, cash flow statements, balance sheets, and they said, that's your desk back there. They kicked the chair out. They said, I don't want to see you sit down till lunchtime. I got a script, and I got a list of phone numbers.
Smart old dial.
Smile and dial, and
Yeah.
it was brutal. So
Brutal.
yeah,
And it wasn't quite as sexy as you imagined.
no,
Pentax.
it wasn't Wall Street. I wasn't Michael Douglas.
No.
So
And it was, and I kind of remember oldie discount brokerage,
Yeah.
but I don't really remember their whole story. You know, they're obviously they get bought out or they went out of business.
I think the latter, to be honest.
So did E.F. Hutton, by the way.
Yeah,
Yeah, but they didn't make it either. But when I first got out of school, I got a job with Drexel.
Right.
And so very similar, like that was my first gig.
Right.
It was your first gig. And I didn't, mine was a little bit different, but I lasted 6 months before I moved to Chicago. 6-7 months. And I moved to Chicago to trade. How long did you last?
in that particular job, I hung in as long as I could. They probably 6 to 8 months.
That's not that long. I mean, that's the same as
No, it wasn't going anywhere. But
hard to make a living.
I just had to find a way to be around the market, and it was just a passion, and that's like a dream that never really died.
What happens sometimes is when you get to inside the brokerage business and you kind of see how the sausage is made, it gets a little bit, I mean, in the pure retail, the old retail side where it was kind of the smile and dial, type of era, it's a little bit depressing.
Yeah, and I didn't really, in that particular case, I definitely didn't agree with a lot of the recommendations that they pitched to clients. And I figured
Whatever's in inventory.
whatever's in inventory, well, there was specific stocks they made more money on, and that's
I'm saying, whatever had the biggest spread.
exactly.
So did you trade options back then?
I got into options trading way back when. Shortly afterwards, I had to scrape some money up. After college, I had student loans, which I paid back. And it was different because for the retail investor back then, you didn't have a screen in front of you. You would have to call physically, pick up the phone and call your broker and find out what the bid ask is. There was a lot more to it, so it was difficult and also a little bit more costly than it is, a lot more costly than it is today.
My first option trades were $25. The trade itself was $25, and then I think it was $5 an option on top of that.
Yes.
That's when I was an employee of Drexel. So when I got to Chicago to trade on the floor, and it was basically you could trade as much as you want for whatever 25 cents or something, I was like, okay, this is good.
Yeah. I had to figure out a way to try to get there, and
So what'd you do next?
temporarily I had to push the stock dream aside, and I had to get a regular job. Like
What was the regular job?
the regular job, I got into banking, just retail banking. I worked my way up to auditor. And with banking at that time, there were so many mergers.
Yeah.
The real money makers were the guys who changed the signs.
So you went from retail brokerage to retail banking.
Yes.
And from the retail banking, then what happened?
From there, I actually moved to Lake Placid, and I got into real estate around 2000.
Lake Placid, Florida.
Correct.
Nobody had ever heard of Lake Placid, Florida.
Well, that's because you don't know much about caladiums.
That's correct. That's correct.
Yes. And I started with real estate. Even then, I started trying to trade. A lot of my trading, though, it really became more user-friendly as the internet evolved.
So what year are we now? Like, can I say your age?
Sure.
55, right?
55.
Perfect. Okay. So what year are we in now?
We're looking at the mid to late 2020s.
Okay.
And I ran across a subscription service that showed option flow,
Okay.
and actually had a really great year. One of the best years I had was and I was trying to pin it down. I knew you were going to ask. Either 2017 or 18. There was an unbelievable amount of call flow in Amazon, and I didn't have much in the account, maybe $5,000. I bought 3 contracts for $1,500 a piece.
That's a lot.
Well, for that size account,
Yeah.
but it's a very small account. It ran into earnings, and the very next day, that account had ballooned to like $28,000.
And you're thinking this is easy.
It was easy, and I was born to do this, and all the things that make
So
your
now
ego go.
This is 2020.
This is about 2018.
Oh, 2018.
Yes.
Okay, got it.
And that account had blown up to $102,000, and
From 5,000.
from 5,000.
Yeah, pretty cool.
It was cool, but
Now you're really thinking you're a genius.
I'm thinking I'm a genius, but I really knew nothing.
Right. No, I understand that.
You don't realize that you don't know nothing until
No. You had $100,000 from 5,000. You're thinking you're a genius.
I wanted to tell people that had been trading for years, give them pointers. And
I'm sure you did.
And I believe the market gods saw that, and they frowned on me and said, let's correct this guy. And
What happened?
well, I did spend some of it, and I did pay my taxes that year.
Okay, let's go.
And then, yeah, slowly but surely, within a year, I blew that account up.
Okay, so you blew the whole account
I
up.
blew the whole account up, and
Now-
that's
Okay, so now the genius is off the table, and what happens? This is when genius fails.
yeah.
So now what's next?
We're determined to learn technical analysis, moving averages.
Okay.
It's more than just realizing, hey, this is a bull market. There's a lot of people like me who make a ton of money.
So now you're in like 2020-ish?
We're in 2020-ish. We're trying to build the account back up.
How are you supporting yourself?
Real estate.
Real estate.
We're doing real estate during the bear market, I believe 2022.
Yep.
I had a lot of listings. The real estate side was good.
Well, Florida real estate at the time, I mean, I don't know so much about Central Florida, but the Florida real estate at the time exploded in that
Yes. Correct.
multi-year period.
So that was a welcome distraction, mostly because I didn't make any boneheaded trades. But I kind of noticed that during that time, you could make money on the short end as well. And,
Sure.
and I started dabbling in that. I didn't grow the account exponentially, but I was like, well, I have a profit for the year in a bear market. And that kind of had given me a lot more confidence because I knew I could trade a bull market.
So here's where we are. So we have this story of this guy that from 12 years old on has a passion for the markets, going through college, getting a little bit disenchanted with the first gig out of school, but then, staying involved the entire time, basically, your entire adult life. And then at some point around, because I got to get to the meat of this thing, at some point around late 2024, you decide, almost, let's call it November, December 2024, you decide it's time, I'm all in.
Yes, and then there was real estate had become kind of a distraction.
Yeah.
I had positions on, I remember, and I had a $10,000 profit intraday, and someone would come into the office and wanted to see a house. When I got back, I lost 5,000 or 6,000 of that profit had gone. And my focus wasn't there in front of the screens the way it needed to be.
So the reason that you're on the Rising Star segment is because of what you've done in 2025. Because we care about like the most recent stuff. And this is what's really interesting to us. And I'm going to cut to the chase and then we'll come back and talk about all the different things you've done. But in 2025, Will turned $100,000 into $250,000. That's your Rising Star.
That's correct.
Yeah. And it's been very consistent, for essentially this entire year. And it's a great story of finally, being very passionate about something, but then finally, having an opportunity to focus on it full time.
Yes.
And then to realize, oh, I'm actually proving concept
Yes.
in real time.
Yes. It's a great feeling. It's about a passion that I never went away, and it's about a dream.
So what do you mostly trade?
I trade mostly equities. I do ETFs.
Do you prefer listed equities or ETFs or futures? Where's the kind of the core of your positions?
I've considered trading futures, but I haven't warmed up to it. I think I found what works for me. I do enjoy trading leaps, and there's a strategy that you can use where you would sell when you have the initial debit. If you have 10 contracts, and let's say it's 2,800 a contracts, 28,000. Just I don't know where those numbers popped in, but they did. You could sell maybe 2 weeks out if they offer a weekly.
Classic poor man's covered call.
Poor man's covered call, and reduce that buying cost. Now, there's times you don't really want to do that. Earnings.
But what give me some examples of some of the stocks you're trading.
Right now, I'm mostly cash. I trade the stocks where actually the options flow leads me to where the stocks.
But are you trading mostly like tech stocks, or do you not really care?
It could be. I try to look for names that you don't see every day, and where you see heavy call activity. And usually, in a perfect world, they'll be hitting longer dated calls.
Are you mostly on the long side? Are you mostly bullish?
I'm mostly bullish, yes. When I trade, I have shorted the market. Usually that's intraday. Zero DTE is part of my strategy, but I trade very, very small.
We trade zero DTE. What are you doing, SPX or?
I'm doing SPY. I'm doing triple Qs. Those are the two that I mainly stick with. Okay. Sometimes maybe T, triple Q, things of that nature.
Are you doing that just more for engagement, or is that for, has it been working to make you money?
It has been working. I'm still fairly new to that. It's something that I try to more like less scalp trade.
But you do like short-term directional trading?
Yes, I do.
Okay, so what does that, how do you do that?
How do I do that? I follow the flow. The options flow is a very key ingredient into where it's leading me. Which names I'm selecting is also based on the options flow.
Okay.
I just don't.
So you found yourself a little niche.
I found a little angle, a little edge.
Yeah.
Yes.
Yeah. I'm going to argue that bull markets are helping that.
Yeah.
Yeah. There's no question about that, more so than for maybe, because option flow statistically doesn't really help. But if you believe that it does and it's working, then you keep doing it, which totally you should. But when you do something short-term directional, you're selling puts, you're buying call spreads, you're just buying the outright. What are you doing?
I'm buying the calls outright. And sometimes if I feel a stock is not going to fall and there's bets placed directionally that is going to rise, I have sold put verticals for credit.
Sure.
And I'll stick to that side versus the call side. If I feel a stock is perhaps in a channel and is not going anywhere, that's when I put on the iron condor.
When you do, let's go through some of these strategies, because I think that's what people like to, to go from 100,000 to 250,000 in, what are we in month, just the beginning of month 9 months. Yeah, 9 months. That's more than just a couple of iron condors.
Sure.
And that's more than just, some credit spreads. You've taken some directional risk. There's no question.
Absolutely.
Yeah. Okay. And are you trading every single day?
Yes. And the other day I was just looking at, I said, well, I must place about 6 trades per day. There's 250 days in the trading year. Well, that's 1,500 trades a year.
Yeah. 1,500.
Yeah.
Yeah. Are you adjusting those trades once you put them on?
Yes, that's part of the.
Because when you do adjustments, you're adjusting them to do what?
We're either rolling up. If it's long, rolling down is something I kind of frown upon, but it can happen. If I'm in a leap, I try to stick to 80 delta. If we're moving in the right direction, I might roll that leap up, take a little money off the table.
And what do you sell against it? What delta?
I don't, as far as covered calls against it.
Yeah.
What I use is I'll look at the chart more than I look at the delta, if that makes sense. And if you can pick a spot where the stock, that area is of significance, if we break higher, I will buy back the calls I sold and double down on the direction of that particular shorter term call.
I can't tell you how much I hate that idea, but it's
I've seen it work though.
if it's working for you,
I've seen it work, Tom.
I believe you. I believe you. Listen, like I said, bull markets help.
It can be done on the put side as well.
No, I understand. Sure. Yeah. It's a very aggressive, trend type of trade.
Yeah.
Yeah.
Well, I think the key is it has to be in an uptrend, what you're trading.
Sure. I mean, it can also work in a downtrend, but yeah, same. But you have much shorter windows.
And there are iron condors I put on where I use a much lower delta, maybe 20, possibly 30, but it all depends. I don't always go by the 45 day.
Naked options a lot?
No, never.
No.
The only time if it's a position I want to own,
Yeah.
I will sell a naked put.
Sure.
And if I get filled, I'm just as happy.
And when you said let's just say, are you better question? Are you ever buying the underlying?
Yeah, I do. I do trade common as well.
You do?
Yeah.
Okay, so you'll buy some stock. When you buy stock, do you sell calls against it?
Based on a scenario, yes, it can. It's not automatic though.
Okay.
If it's a short-term trade, obviously I'm not.
So where do you think most of your profits came from? From Delta?
No, actually, I think just mostly directional trades, and probably call options, managing the leaps, sitting patiently, selling premium against it.
What underlyings have been best to you?
My biggest trade of the year was a company called Pure Cycle Technology, PCT. I noticed options flow in it out to January. And it's kind of typical to the strategy. I knew Stanley Druckenmiller had a position in it, and that helped.
Did he call you?
I'm waiting. I'm patiently waiting. I think it's going to happen, Tom. I really do. But I bought 100 contracts.
Do you think he's telling people that you bought the stock?
I never thought I'd meet Tom Sosnoff, and then, who knows if.
Is the trade you put on right after your best trade?
Correct. And the more I thought about it, it's true, because I try to take the emotions out of trading. When we think emotions, we think about revenge trading. We think about, I've had a bad day, I need to get some more money. That's not a good mind state to be in. But we never think about all the adrenaline, testosterone, serotonin, dopamine that's flowing through you after you've had a big winner. So what I do is I take a few days off just to calm down. And then when I can see the market clearly again, I will go ahead and take it up again.
That is very interesting, because my mind doesn't work that way.
I understand.
Totally different. So I love hearing these stories. So now you're not bitten. You're now all in. Like, this is not a passing.
There's no going back.
That's right. There's no going back.
We've gone too far.
This is the rest of your life now.
Yes.
Yeah. You're prepared for this?
The ups, the downs. I've been on both sides of the coin.
Right.
Yes.
Right. But you're committed now.
I'm committed.
Yeah. There's no more 2:00 showings in the,
No, we're down to one listing. So there could be, but
So how do you grow from here?
well, I mean, if you size up and you get lucky, it could be 1 year, but that's not my strategy. I
You
think
don't want that to be your strategy.
no. Although I like a mill, I think just being consistent, watching your position sizing.
It's just an order.
Yeah, it's been pretty good this year.
Obviously, yeah, but I mean, do you look at things like, I mean, because you're not really trading very probabilistically. It's a little different approach. You're much more, there's no question you're directional,
Yes.
which there's absolutely nothing wrong with that, but that's a little less than it's I should say less. It's a little different than a probabilistic approach.
Yes. No, it's a different strategy. Most definitely.
Are you trading any of the big name companies, or is it all just kind of?
No, I am. I do trade. For example, Broadcom was one recent winner.
They had earnings on Friday.
Yeah, I try to avoid the earnings. Though,
do.
but I should have played that one. For
I was gonna ask.
evidently.
Yeah.
Yeah.
Yeah, they had.
I'll do that. Google is another. But it's usually the flow that guides me. I'm in a room with a lot of really good traders.
In a chat room.
In a chat room.
Now, did you trade? You traded in 2022, which was a down year most of the year.
Yes.
How tough was that for you with a bullish bias?
I thought about that a lot, but it's just the ability. I was very busy with real estate that year,
Yeah.
and I did have some things personally with my mom's health. However, intraday just simply became one of the three strategies I use. One for income, which is iron condors, put credit spreads, call credit spreads. Sometimes I just pick one side, and sometimes I put the full iron condor. I find that to be a pretty decent income. And then there's both leaps and call it selling premium against leaps.
Yeah.
If a situation where the market doesn't look good, and that's the whole key, is you have to know, and well, that's the $1 million question. Not everyone
Yeah.
can.
Do you let me know when the market doesn't look good?
I wish I could.
Because we're pretty much at record highs right now. So
Yeah,
you gotta let me know when the market doesn't.
I'm heavy cash, but it doesn't mean that we can't melt up into the end of the year either.
No, of course not.
So you have to have an unbiased look when you're trading the market.
Do you come in every day with a relatively unbiased look? Like every day you start, in your head, you start over? Yeah.
Yes.
That's the smart thing. That's the smart thing to do. And do you think you're going to incorporate any more either strategies and or underlyings this year?
Yeah, I mean, for example, GLD is one that I sold a put credit spread against. I saw some activity on the call side, and I said, well, I don't know
What, the gold ETF?
the gold ETF. I'd like to look at. I noticed a video in which you showed the different correlations between the S&P. That was very good, by the way. And in a bad market, those are options as well, from natural gas to
Yeah. This has been great. Will, this has been, it's hard to come here and share your story in 30 minutes or less. It's a challenge. And I think, what you've done in 2025 is an exceptional story of, passion finally paying off. And hopefully you can continue that into perpetuity. So you got a lot of time left, and so you got to do this forever.
we hope, yes.
Yeah, you do. So thanks so much, and enjoy your time in Chicago.
Thank you, Tom. Appreciate it.
Scotty Byrne.
Goodness, how you've done a whole week juggling all of this. This is the third day, and I'm absolutely beat down. So, yeah, I don't know how you managed it.
You are a superstar. I have to say, it has been an adventure. Wouldn't have done it without Scotty. This morning, woke up to unfulfilled Uber again. I thought, you know what? I'm going to march to the to the bus stop. Bus stop had all the buses delayed. And I walked to the station